November rally is in the books, with the Dow surging nearly 9% for its best month since October of 2022. The index also closing at its high for the year after gaining more than 500 points on Thursday. But will this rally keep giving as we get into the giving month of December? Joining us right now is senior investment strategist at Edward Jones Mona Mahajan. Mona, what do you think? More gains to come or not?
Yeah, thanks, Becky. Look, it's been a phenomenal November. And in fact, not only the S&P and Dow, but we've seen some of the lagging parts of the market play some catch up here as well. We saw small caps participate in this rally. We saw bond markets participate in this rally as well. Now, the pace that we saw in November with the S&P up nearly 10%, we don't know if that pace will continue through December, but we are seeing the ingredients in place for a sustainable rally. And that's what we call kind of a trifecta of fundamental events. One, of course, is inflation continues to moderate, and we see perhaps some signs that that could continue. Number two, the Fed looks like it is now stepping to the sidelines, at least in terms of rate hikes. And the conversation will shift in 2024 to when rate cuts may begin. And the third one was, really interesting, which is a kind of gradual cooling in the economy, what we're calling a Goldilocks cooling in the economy. So not too hot, not too cold. And that's one, if that sustains, when you look historically, when the Fed pauses and then cuts, markets can do well if we don't fall into any recessionary environment. That, for now, remains our base case. We do see a cooling to below kind of trend or potential growth, but no deeper prolonged economic downturn. So we think we're well set up heading into 2024. The pace may slow a little bit, but take advantage of that volatility if you can.
You like small cap stocks, and I was just looking at the Russell 2000. Maybe we can call it up here on the screen. For the month, the Russell 2000 up by 8.8%. So it's all really strong gains, but it is still 26% below its record highs. Is that your play here? You just think that there's a lot more room, that the Russell 2000, other small techs or small caps have not had nearly the run that we've seen with the other major averages?
Yeah, look, historically, small caps tend to show some leadership when you're heading into the early stages of an economic cycle. So, we just talked about we may see some economic cooling, but if inflation moderates and, rates start to continue to move lower, we do think the economy will start to reaccelerate again sometime in 2024. And, markets won't wait for that confirmation. They will start to price that in ahead of time. And so we think small caps, which have lagged this year, are well positioned to take advantage of that recovery play in the economy next year. We also think the backdrop of lower Fed funds rate, as well as a potential earnings reacceleration next year, is one that favors small caps, especially since the valuations are less stretched than what we see in the rest of the market as well. So, yes, that's one that we think should be part of your basket for next year.
Yeah, I was going to say the credit issues were much bigger for small companies as rates rose. A situation where you think rates will come back down and that will benefit these companies too?
Yeah, it's a great call out. Small caps are actually much more levered to variable rate debt as well. So they had much more floating rate exposure. So as rates were rising, they did come under pressure. Now, hopefully, the opposite will come into place as well.